So the difference between traditional investing and impact investing, I think, is really that you add a third dimension to it. In addition to making a risk-adjusted financial return, you also want to know what that investment does in the real world. What does it mean to people, the environment, society? And I think that third dimension is really the ultimate goal. Investing to me is just a means to an end. The most abused cliche, I think, in sustainability land is win-win-win. You can't easily win on all fronts and never trade off one thing against the other. Now, I'm all for trading off, but not return versus impact. I think, if you are going to trade off, make sure you trade off risk and perhaps control versus impact. And I believe that that is in fact the essence of the entire impact investing industry. How to take more responsible risk for more real world impact. When I started at PGGM 11 years ago, I think responsible investing really meant not doing certain things. So we were excluding the obvious evil stuff from our portfolio and investment universe. That has changed. It has changed from not doing things to actually pursuing important things. And I think that has changed the entire industry and also my experience in it. It's much more fun pursuing global goods rather than doing the occasional exclusion. I think what is missing in the industry is a sense of humor. I would love to put the fun back into fund management. And I think if we are not going to bore out ourselves or our audience, we need to make sure that people get excited about this stuff. Investing should be more than just bookkeeping. Investing should be pursuing the stuff that we all want but forgot how to get there. I think the SDGs are important in our investment framework because, it's like a little shortcut to defining sustainability. You could spend the rest of your career trying to nail down sustainability. The United Nations has done it for us. The framework was never meant for investors, but we use it to our advantage. It actually works quite well. 17 distinct boxes where you can put in investments into important themes that your clients care about. The best thing investors can do to grow the impact of their investments and to grow the industry is to take more responsible risk, to get better at judging future risks. Risk right now is mostly a statistical phenomenon. What happened over the past 20 years, you extrapolate that and you arrive at some measure of risk. I think that's not going to cut it anymore. We need to trust projections. We need to trust scenarios. And on the back of those scenarios, in an exponentially changing world, yes, we can justify taking on more risk in order to get to the impact we all need.